Hello, everyone, and welcome back to another episode of WagMe TV. Fellows are back this week, and today we're going to be doing a deep dive on an exciting protocol on the Arbitrum network called Radiant. It's a borrowing and lending protocol, and we're going to show you guys how to get 50% APY on your stables. So stay tuned, and let's kick it off.
Yeah, I guess just to start us off, we might just want to go briefly into what is Radiant Capital, right? So, really, really briefly, it's a fully decentralized, community governed protocol. You can kind of look at it as a one stop shop money market, right? Where users can deposit and borrow assets across multiple chains in a seamless manner. So the idea with this is they want to unify the tons and tons of fragmented liquidity across Web3 and DeFi and all these markets really under one pretty much safe what they market as a safe, user-friendly, capital efficient omni-chain protocol, right? And so I know Evan had a quick slide that we wanted to run through.
Yeah, so Radiant has had a super successful last couple months. And I think, like you're saying, Mata, they've really been able to achieve what they set out to with, a lot of these returns being omni-chain. And so you see in this TVL chart on DeFi Llama, in the last 6 months, they've really ramped up the amount of TVL that they have. And, all of this is really in version one, where we saw version two really kind of kick off in late April, early May. So, at the moment, they're the number 4 protocol on Arbitrum in terms of TVL. And I believe they also, the Radiant wrapped ETH pool is the largest pool on Balancer or on the Arbitrum network on Balancer. So obviously, it's kind of been a big last 6 months for them. And it seems like they're taking that momentum and continuing to roll with it with some of the newest stuff that they've been pushing out. So, yeah, do you guys want to hop into that?
Yeah, definitely. Let's kick it off and let's show our viewers how to get this 50% APY, shall we? All right. So here we go. What you see here is an overview of the homepage of the Radiant DApp, right? And what you see here is really just a pretty familiar interface with anybody who's messed around with DeFi at all. It really is just your pretty much run of the mill borrowing and lending market where you're able to supply assets here at a given deposit APY, which is basically lend them out for others to borrow. And on the flip side, if you've supplied collateral, you're actually able to borrow assets if you want to at obviously a higher interest rate here. Now, what stands out here is these wild, pretty epic interest rates going on right now with the Radiant token. And so, what we can do here is dive into how you guys can achieve right now in about 60% on stablecoins. So let's go in here and let's figure out how to do this. So if we go into USDC, for example, right? What you want to do here is you're going to be able to deposit. So right now I have about 100 USDC deposited, and I can go over here into my dashboard and see that I've deposited about $100 of USDC. Now coming back to the money market here for USDC, if I wanted to just borrow assets, right? I would be able to borrow up to 80 LTV on USDC. So if I wanted to come over here and let's say borrow like 50 USDC, I'd be able to. You can see the health factor for this loan, and you can see the borrow APY on what I'd be paying to borrow this asset, right? Similarly, if we go back, let's say I wanted to borrow some Ethereum, I'd be able to do that as well, or any of these other assets. As you can see, Wrap Bitcoin, Wrap Staked ETH, Arbitrum, all these assets you're able to kind of leverage up. Now, how do you get the 60%? Right, that's what everyone wants to know. An interesting feature that they've implemented in V2 is this one-click loop and lock. What this ends up doing is, if you're familiar with looping, or if you're not familiar with looping in DeFi, what you're basically able to do is, let's say I took, my $100 of collateral and I borrowed $80 of USDC against it, and then I went and redeposited that back into the protocol as collateral, and then I went on that and I did an 80% LTV loan on that $80. And I continuously did that over and over and over as many times as I could to basically get leverage exposure to the yield that they're offering, right? Now, what they've built in V2 is a one-click way to do this, which is really cool, right? I can take, let's say, $100 here, and I can choose how much leverage I want. And with the max leverage you can get, which is obviously the highest risk, we would be achieving a 61% rewards APY right now, which is great. Now, you might be wondering, like, okay, I've seen a lot of these DeFi protocols before. Anytime I see really high yields like this, it's probably unsustainable, right? Most people are going to come in, they're going to farm these pools, and they're just going to dump the token. And, before long, the token is pretty much going to go to zero. And so the real question becomes, like, what differentiates Radiant from some of these other players? And what have they done to make the protocol more sustainable? If you think about it, the issue with a lot of the previous DeFi protocols that basically go to zero because of their farming rewards is two things. One is unsustainable yield. So they're just have crazy degen APYs that cause crazy emissions and obviously just way too much supply into the market. The next issue is a lack of liquidity for that token itself, right? So if you have a ton of emissions coming into the market, a ton of supply coming into the market, and a lot of sell pressure, and you sell that into a liquidity pool, which isn't properly capitalized, which isn't properly liquid, what you get is basically like a death spiral of the protocol. And so how does Radiant aim to solve this? They're trying to do a couple of different things, right? First of all, not everyone is entitled to these sorts of emissions. You actually have to do something specific in order to be entitled to these emissions. Now, what you have to do, if we go back to this function, you can see in order to get the reward APY, you actually have to contribute to the liquidity pool for the RDNT token, right? Here you can see DLP, and over here under manage, you should be able to see your DLP position. It's only the people who contribute to this DLP and actually are putting skin in the game when it comes to liquidity and contributing to the liquidity of the RDNT token. Only if you do that are you able to actually get access to the emissions, the high emissions that you see on this front page, right? So that's one interesting that they've done. The other thing that they really do here is align incentives in a very interesting way. So a lot of times the farmers are going to be on one end where they're farming the tokens and then just dumping the tokens. And the liquidity providers are going to be on the other end. A lot of the time it's the protocol, a lot of times it's other market makers and stuff like that. And they're just going to be farming the same thing, hoping for more rewards and basically just exiting the liquidity pool. So the incentives are just really not aligned. And what it causes is just like you end up with a death spiral, as we kind of talked about before. Here, what they've done is, in order to farm and benefit from the huge emissions, you also have to be a part of the liquidity pool. And if there's crazy sell pressure into the liquidity pool, obviously that's not good for your liquidity position either, right? So what they've really done here is align the incentives in a very novel way, and a really interesting way to both manage excess emissions and also drive liquidity for the token itself. So that's really kind of just like a quick rundown of the protocol. All these different tabs are used in different ways, right? So your dashboard, you can see kind of what your deposits and what your borrow are, as well as your health factor for your loans. Over here, obviously the markets where you can go to borrow and to lend and borrow. And then here under manage, my computer is freezing a bit. But here under manage, this is where you really manage your LP positions. If you notice here, another very interesting thing they've done to really incentivize liquidity for their token is implement this idea of locks, right? So in order to get the emissions, you have to lock your liquidity tokens. What they've also done is the longer you lock your liquidity tokens for, the higher emissions you're set to get and the bigger yield boost they're set to get. Yet another way that they're really trying to align the incentives in the entire ecosystem. Yeah, so that's a quick rundown of Radiant as a reminder, in order to get the most degen yield, come over here, go to whatever token you want, go to the loop function, obviously manage your risk accordingly, but have a blast. They're obviously incentivizing these pools a lot. So definitely a big opportunity right now in the DeFi space, particularly on Arbitrum, which is a very low cost chain. What do you guys anything you guys would add? Any questions?
Yeah, that's a great overview, Zoe. And I think it's important to say that this is not financial advice. Do your own research with this stuff, but we really see this as a chance to try and fix some of those problems that we've seen with DeFi in the past, where a lot of these tokens go to zero. So I think these are some novel changes that the Radiant team has come up with for V2 here.
Yeah, I think it's really important for the DeFi space as a whole, right? We've had probably about 95 or maybe even greater than 95% of DeFi protocols, again, they go to zero over time because they just haven't been able to figure this out or haven't wanted to figure this out, right? So I think this kind of V2, if you will, of Radiant is nice because it kind of starts to feature some of these more revolutionary changes to not only the core protocol and mechanics, but how the emissions work, the utility of the token and tokens, and really, again, that deeper cross-chain functionality that they're really going for over time as a use case within the DeFi space. So really like where they're going with this. It'll be interesting to see how this goes and how they continue to iterate on it. And I do enjoy the fact that they're really responding to the concerns of their community with this V2 edition on top of what they had put together before. So super exciting stuff. And thanks for the rundown there, Zoe.
Yeah, I mean, I think it's definitely cool that they're it seems like they're focusing on longevity. It's not just somewhat of a form of a cash grab for LP providers or for the founders, right? It's more of, hey, how do we actually make this sustainable? And I think that one of the biggest things to watch is going to be that TVL. So obviously we saw V2 drop in that March timeframe. And so if we can see that continue to go up past that 200 million mark and continue to rise in terms of adoption of what they're seeing in V2, I think that is going to be a key indicator whenever we're talking about, a DeFi protocol. We want to see TVL either flat or steady on the increase and not declining, because obviously declining means that there's, decreased adoption. Increasing or flat means that at least there is sustained adoption or increasing adoption, which honestly in today's market for DeFi, if you just have sustained adoption, that's a great win. So I think if, we can see them continue to gain that or at least sustain that, I think that means that this V2 model is actually catching on, and longevity the longevity outlook of their plan is actually working. So I'm curious to see how that happens.
Yeah, get that network effect going, especially in the next bull market.
Absolutely. Well, we'll definitely be keeping tabs on Radiant going forward. Obviously some super exciting yields here, and we're going to be, doing some more research on other protocols to provide you guys with the best alpha. So if you have any other, opportunities that we might be missing, make sure to comment down below. Also, if you're farming on Radiant and you have any other thoughts, definitely let us know in the comments. And yeah, if you found any of this useful, make sure to like, comment, and subscribe down below. And we'll see you next week here on WAGME TV.
WAGME.